This was my first trade on my new evaluation account. Your first trade on an eval sets the tone. This is how I approached mine. So we're on FX replay because this trade happened on Friday, 2nd of January. So this was a while ago. This was the first trade I took on my evaluation. So the first thing we do is I normally get on the charter around 2 o'clock and I'd scope out for any higher time frame for value gaps. And as you can see, there is a small 4-hour down here. So we're just going to mark that out. Nothing too special. Now, if we scroll down to the 1 hour, we're going to check for any more fair value gaps than there should be. And as you can see, we're already in a fat 1 hour fair value gap. So let's mark that out. So we're approaching the CE of this 1 hour fair value gap. So if we're expecting a reaction on market open, I am expecting another push upwards to respect this fair value gap. So basically up, retested the fair value gap, and back up. That's just the general idea of it. Obviously, we have to get a higher time frame setter. So let's go back down to the 1 minute, because that's where we normally look for our setups. As you can see here, this is gorgeous. This is accumulation. This is what you call price accumulating. It's just in a range. If I just mark out a box, you can just see from the high to the low, we're kind of just in this box going up, down, up, down, up, down. So let's just let price play until 2:30. So 2:30 is approaching. Boom. We get a first fat reaction upwards. Okay. Be careful, guys. This very well could be price manipulation. However, there are some sells you could take from this. However, as you can see, if we mark out the top of the accumulation, we can see we've swept it nicely. We have went into this hourly fair value gap, clearly reacted bullish from it, but be careful, guys. This could very well be what you call manipulation. So let's go back down to the 30-second to see if there are any sells on the 30-second, just in case. Okay, so we're just flying upwards. Anything else? No? Oh my lord. As you can see, we have a fat manipulation candle downwards. So this is what you call manipulation. You've got the market moves in three. You've got accumulation, price accumulating, then you've got a manipulation move. It kind of just takes out all the liquidity at the top of the accumulation box and then flies down. But what does that give us? It gives us a small inversion right here. This is what you call a 1 minute inverse. You don't know what that is. A 1 minute inverse is when a candle creates a fair value gap. So it just flies up and leaves a gap, and price doesn't come back to that gap. But then after a few candles, it just flies down completely and completely just goes past the gap and closes far below it. So some people would have taken this setup. This is what you call the AMD model. Accumulation, manipulation, distribution. So this is a complete reactionary trade. There's no bias. It's just a mech model, completely just reacting off of the market. Accumulation, manipulation, and distribution is just catching the move downwards. So if we just mark cut the position, this is what some people would have taken. Probably would have went for a 1-to-1, nothing special. So if we just mark that out, this is where people would set to break even. Some people would set it here, some people would set it here. Let's just set it here for the sake of it. I did not take this trade, but let's have a go. So you'd set to break even almost instantly. And we've been break evened out of the trade. And look, as you can see, it was a pretty good break even. This price is just chopping about. So that position is now gone. So what are we now looking for? Our original bias was bias. So if we go down to the 30-second just to see if there's anything we miss. Oh, and look, what do we have here on the 30-second? We have a 30-second inversion. So it's the same thing. Price completely runs down, leaves a gap, and the next candle just completely flies over it. So what did we have here? We had a sweep of a low, and we had another internal sweep. So an internal sweep is just another sweep inside of the leg, not a sweep from a while back, a sweep inside of the same leg. So what I would have done, but what I did, is I took a long position from here. I took a buy. And I put my stops at the low. I went for about a 1 to 4 because I didn't want to do too crazy. And I risked about 500. And my break-even point was at this liquidity point. The reason behind that is because if price is truly bullish, price will sweep this liquidity and just continue going upwards, not sweep the liquidity and come back down. That's not what we want to see. So we go up. As you can see, we're well in profits. So instantly, I would set to be right there. And we get break even. Unlucky, we were flowing around $1,000 in profit, but that's life. So we get out of that trade. That's a break-even trade. The market's only just died. We're not even 15 minutes into the session, so there will still be opportunities. So let's just continue to go back, and price continues to go down. We have another resweep of internal liquidity right here. So let's just mark that out just for you guys to see. Normally I do this by complete eye. I don't really mark out much. And we're going down. Okay. We have a 30-second inversion. But why am I not marking that out? I'm not marking that out because there could be a higher time frame inversion. And there you go. As you can see, we've got a 1-minute inversion right here. Do we have anything more than that? Nope. The highest time frame inversion is on the 1-minute chart, so let's mark that out. So price has to close above this inversion. So what is the time? So we've got another 30-second to play. Okay, perfect. Perfect. So as you can see, price closed above this 1-minute inversion, which is even stronger than 30-second. So I'd put my stop loss just at the low. So let me just calculate this. So this is what I would have taken. I went for about a 1 to 3. So we place the position, we risk 500, and we let price go. And TP smashed. And that is $1,500 on the day with a 1 to 3 risk to reward ratio. Simple. You didn't see too much craziness here. The original bias was white. We flew up from here. As you can see, if we just let price play, we just continue to go up and up and up. Anyway, so this is the full trade analysis. Listen, I'm not trying to do a get-rich-quick scheme. I'm not trying to do any account flips. This is just straight analysis. I'm just doing the trades. I'm just following a system. If you want to see the rules I follow, I've got a free NQ execution rule set. These are the rules I follow. This is going to take you far. I mean, if you're trading a system, if you want to become profitable, you just have to follow this. This is it. It's just a Notion template that I made. It's for free. The link's in the description. Nothing much to it. These are the rules I followed to get results like this. And eventually I will take a loss and I'll learn from it. But if I follow these rules, I will get a pair. So there's a Discord link in the description if you wanna join the community, and subscribe to me if you want to see full transparency in this trading series. We'll see what we can do just following a system, and we'll see if it takes us to a payout. I'll see you in the next video.